Hello and welcome to another episode of Global Business Insights, where we bring you fresh thinking by seasoned professionals on the main business headlines. In the UK, the inflation rate just out jumped up to 2.3% in the year to October, an increase from 1.7% in September, back above the Bank of England's 2% target. Producer price inflation month on month in Germany increased to 0.2% in October from minus 0.5% in September 2024. And the People's Bank of China has announced a decision to leave its loan prime rates unchanged, with the 1-year and 5-year LPRs at 3.1% and 3.6%. Respectively. Japan's exports rose up 3.1% year on year in October. This was better than expectations and a recovery from a 43-month low in September. In the European Union, new criteria requiring Chinese businesses to have factories in Europe and share technological know-how will be introduced when Brussels invites bids for €1 billion of grants to develop batteries in December. Gold traded higher yesterday for a second consecutive day on fears of an escalation in geopolitical tensions as Russian President Vladimir Putin revised the country's nuclear policy. Safe havens are in demand and stocks mostly down, with safer treasuries gaining as investors responded to the latest escalation. Finland and Sweden are reported to be telling citizens to elevate their preparedness for nuclear war. Bellwether Walmart yesterday reported revenue of $169.6 billion in the quarter, up 5.5% year on year, also much higher than estimates. Guidance for the year also raised as wealthier customers hit by the lingering inflation were attracted to its low price products. Lowe's, that's the home improvement retailer, dropped more than 3% after announcing expectations for sales to decline in 2024. That guidance overshadowed a better than expected third quarter report. And Bitcoin rose to yet another record high above $94,000 as a report that Trump's social media company was in talks to buy a crypto trading firm backed hit the headlines. Federal antitrust officials and the Department of Justice are reported to be trying to force Google to sell off its Chrome web browser as part of an antitrust ruling. The ruling is being appealed, however. The Chrome browser could fetch about $20 billion, and Google may also have to implement new rules around its AI and Android technologies, though it's still unclear what exactly those rules are and how an incoming Trump government will affect this process. Analysts see African central banks mostly set to lower benchmark rates ahead of Trump presidency, which some agree could drive up inflation globally. 8 apex banks, including South Africa and Kenya, are expected to cut in the next fortnight, while 5 central banks are expected to hold. Nigeria stands out as likely to raise rates when it meets next week on Monday and Tuesday, as it still fights rising inflation and exchange rate depreciation. At the 19th G20 Leaders Summit opening session in Rio de Janeiro, Brazil, President Bola Tinubu welcomed the creation of the Global Alliance Against Hunger and Poverty, championed by President Luiz Inácio Lula da Silva of Brazil. A focus on poverty is definitely overdue as inflation ravages the vulnerable. First, on UK inflation just out, not so good news. October data at 2.3% year-on-year beat expectations for a 2.2% rise. Also moving back above the Bank of England's 2% target. Month-on-month UK consumer inflation, that's the CPI, came in at 0.6% in October after no growth in September. The consensus was for a 0.5% increase. Core CPI, that is excluding volatile food and energy, up by 3.3% year on year in October, as against the 3.2% growth in September, also higher than forecast of 3.1% growth. The UK October services CPI inflation also advanced to 5% year on year in October versus September's 4.9%. The next BOE meeting is on the 19th of December, a day after the November CPI data comes out, which will be important. That's the data for November in determining whether we see further easing of rates or a cautious hold. A sudden escalation of the Russia-Ukraine war with the United States, UK and France allowing Ukraine to use long-range missiles to strike Russian territory, and the subsequent change in Russia's nuclear rules has led to a return of European geopolitical risk, lifting Brent crude, for example, slightly to $73 per barrel. Biden's decision, which requires direct U.S. technical support, deviates from most of Europe and is a major U.S. policy shift, also unusual in a transition of power. Sergei Lavrov, Russian foreign minister, said in comments that the attack lowers the thresholds for use of nuclear weapons. It's still unclear how Trump will restore peace as markets are paying close attention to what's happening. All this as Madame Lagarde, ECB boss, warns that Europe needs a better economy or its welfare and defense budget could be at risk. It is unlikely that Germany, so close to an election, wants any elevation in the Russia-Ukraine situation. Markets initially reacted with a downslide, later shaken off the gloom, with the Nasdaq closing up 0.7% ahead of Nvidia earnings announcement later today. Now to an unusual theme on trends in 2025. Experts say we are already in a decade of deconstruction. COVID led to some measure of workplace deconstruction, but the deconstruction may have spread to other spheres. In government sector, for example, acute dissatisfaction with productivity and efficiency is driving demand for new models, as we've seen in Europe and to some extent in the United States. In fashion and the arts, it's all about breaking away from traditional garment construction and embracing a different aesthetic. Are we seeing across sectors changes in buyer values, which could mean dismantling of traditional legacy structures and new ideas and models emerging from what we know as the old normal? I want to know if you sense this as a wider trend. Customers are questioning the balance of cost and value in new ways, and the generational wealth disparities are forcing people to change their priorities, rethinking the familiar milestones and traditional life paths like home ownership, long-term planning and savings for retirement, causing priorities to shift dramatically. Concerns about cost of living are also affecting decisions, with the younger generation redefining success by other criteria. How will this influence how brands and products are targeted and encourage what some call a servicification of manufacturing, all in a bid to meet needs for flexibility and affordability? Here's a replay of findings from a recent Accenture survey on lifestyle trends for 2025. And like I said, let me know what you think. Are we indeed in a decade of deconstruction, and which areas do you think will be more affected than others? A recent Accenture 2025 Life Trend survey has shown that convenience is giving way to trust as the leading digital driver for customers. The survey includes inputs gathered from in-depth interviews with thought leaders in 8 countries, as well as an extensive online survey of 24,295 people across 22 markets. You would have thought artificial intelligence, robots and robotaxis will be taking over, but not so fast. People are rebalancing, according to this survey, their relationship with technology, with each other and the world around them, creating new challenges and opportunities for businesses and brands. We're also seeing a reset where 60% of people are questioning the authenticity of online content more than before. Last Friday, for example, a judge ruled that Meta must face a lawsuit by Massachusetts alleging it deliberately deployed features on Instagram to addict young users and deceived the public about the dangers it posed to the mental health of teenagers. There are 5 lifestyle trends for 2025 showing what people will need and want from business. First, there is a different hesitation to engaging online as people can no longer trust the experience in terms of what they see, creating a risk for anyone doing business there. There is a cost to this hesitation with ability to trust digital technology under threat and its additive value diluted by authenticity issues. The survey says over half surveyed have seen fake news or articles, and 33% have experienced the deep fake attacks or scams for personal information and or money. Second, there is demand for change from parents towards helping young people shape a safe, healthy relationship with digital technology. Evidence of harm to children and minors stacking up, encompassing bullying, abuse, unrealistic beauty standards, deep fake sextortion, and age-inappropriate content, requiring a radical rethink that could decimate some services completely and perhaps create new ones. Third, there is an impatience to use technology to find faster ways to pursue a goal, and social media offers a stage on which anyone can share their experiences and advice in relatable, intimate ways. There is a new power of the crowd driven by a strong person-to-person affinity, which satisfies impatience for new ways to achieve health, wealth, happiness, and better outcomes. 63% of survey respondents of all ages still say they get inspiration from social media on how to do things smarter. Fourth, employees are strained and an emotional distance between workers and work is becoming clear. A relentless push for efficiency is leaving employees feeling like productivity carries more weight for leaders than their skills, experience, and contribution to the company culture. Businesses are responding by fostering ownership and involvement in new ways, including more of equity for staff to upend the traditional union structures. And as for unions, Boeing and its striking labor union reached a new tentative agreement that could end a month-long strike involving 33,000 workers in the Pacific Northwest. The strike halted production of 737 MAX and 777 planes. Staff dissatisfaction will require more proactive handling. Fifth, the survey sees in 2025 people finding new ways of spending spare time, finding joy and balance in real-world activities and genuine human connections, and changing the opportunity for businesses. So what does this all mean? Distrust is killing legacy branding and information structures as trust shifts to crowd social platforms rather than traditional news providers, and implies more investment in content moderation. Brands also need to establish and communicate clear methods for customers to verify their authenticity. The survey also suggests that if reaching younger people matters to a brand, it implies a less digital, social media dependent strategy. The workforce also needs fresh re-energization, and there's also need for a fresh balance as brands seek out non-digital ways to authentically connect with customers. A lot to chew for 2025. Asian shares were cautiously higher as investors looked ahead to third quarter results, earnings coming from Nvidia later today after the closing bell in Wall Street. Well, that's all we have on this episode of Global Business Insights. This is Bode Oshosami. Thanks for sharing on Facebook, LinkedIn, X, and YouTube. And again, thank you so very much for watching. Bye-bye.